Hello, and welcome to the Banking Podcast. I'm your host, Ashton Sanders, and in the podcast, we're going to go through everything you need to know about finance, banking, credit, and money just all together. So as we go through this process, we want to make sure that you get the right information so that you can take things to the next level in your business life. This is definitely directed towards our entrepreneur crowd. However, all the aspiring entrepreneurs, you're definitely welcome to, listen in and get a lot of the insight because it definitely will help you as well. Now, before we get too far into this, I want to kind of give you some insight on, who I am, where's my story is, why do I have the credibility to even talk to you about this process? Well, I am the co-CEO and founder of the Emerson Capital. All right, we are based here in Houston, Texas, and I've been helping a lot of entrepreneurs for years. We've been almost 10 years into this process of helping entrepreneurs when it comes to getting loans, lines of credit cards, building up their credit, and putting them in the best situation possible to get access to large amounts of funding. So everything that we talk about throughout this process is not for you to go ahead and get a small little baby credit card, but for you to actually get real access to real money and make the real plays that you need to make in your day-to-day life. Now, I started off I'm from Pittsburgh, Pennsylvania. I grew up as a young entrepreneur, always wanted to kind of make money. I did my first odd job business at 15 years old, where I was going around to different people's homes and basically helping them, clean the floors, do the dishes. I had signs up. I was going around my church and going through the whole process of just getting the word out. I made my own, like I said, flyers and everything. And in doing so, it was a challenge, but, I just had that inkling. And over time, I actually got more into it as I got a job selling Cutco knives. So if anyone who's ever been a part of the vector marketing industry or whatever it may be, I was selling Cutco knives for a while and started finding, friends that would go buy the biggest package and some of the smallest packages. And my family told me I was crazy because I'm like, thinking this is going to be the next biggest thing ever. And they were right, it wasn't. But I did learn a lot about the sales process, about the business process. And in doing so, I got really into, just sales as a whole. I did a lot of different jobs in the sales space and worked for Home Depot and Sears and just did that whole thing for quite some time. But over time, I wanted to take things to the next level. So I started learning about marketing. And then from there, I actually ended up moving out to Los Angeles. So going from LA, I lived out there for maybe about 10 years. And that was the time where I had to grow up. I had to learn a lot about life and business because, being in Pittsburgh, totally different world compared to being out there in LA. And when I got to LA, I had really strong goals that I wanted to be able to be my own person, have my own business and grow that business from scratch where I can really have something of my own that I can actually live off of consistently, where I don't have to work for nobody else. And through all the nonsense and trial and error, I was able to accomplish that. But there were a lot of hurdles in the process. I found myself in a scenario where I was making good money. I was doing affiliate marketing, and me and our previous partner, we had set up a system where we were able to make a lot of money doing affiliate marketing, where we get people to do trial offers of products and services. And in doing so, I learned a lot about just that whole side of the game and just the business world. And then since then, we ended up actually getting out of the business together and got into the finance space. But that process of getting into finance was a struggle because when we switched from that business, everything stopped. I went from, making $1,000 a day to making nothing, and it was very, very, very difficult to the point where I was homeless. I had lost everything I had built up, lost my car, where I was staying at, and literally was in a situation where I didn't know where I was going to get the next meal. Ended up staying actually at a hostel for some time in North Hollywood, which is, again, the worst ever hostel. They had bed bugs and roaches going. I never even knew what a bed bug was until I got to the hostel, but found that out the hard way. And we had basically a situation where there's 2 bunk beds and 4 people in there, random men from all across the world, just staying in this place. And it was pretty much a lot of the lowest of the lowest in their situations at the time. So One of the things that it prepared me for was understanding, how to work with everybody, deal with every type of personality. They had people who were, pedophiles. They had random people who were aspiring actors. You had fraudsters. You had, the most shadiest people. Then you got people stealing clothes. Then you got pastors, all in the same location. So it was a rough experience, but after that time, I actually ended up, donating plasma to even have to stay there. I was in a really bad bind. I was just trying to figure out how I was going to grow the business. And, over time, I actually ended up losing that particular place where I actually couldn't afford that anymore. So I had to take all of my clothes and put them in a shopping cart and just leave them at the laundromat while I go figure out what I'm going to do. And when I did that, I was staying in or I guess you can say, walking through a North Hollywood park and sleeping on the bench and during the nighttime. So it was a rough situation, altogether, but I ended up getting a job at Bank of America. And when I got the job at Bank of America, I started to learn about finance and how the whole process worked. I remember specifically there was a time when one of the larger insurance companies, I can't share names for secrecy, but one of the very large insurance companies had like a bunch of bank accounts, and I was just so floored by that. And then I saw another person who had like $300,000 credit cards at Bank of America. And I was just in such a shock that was possible. And I wanted to learn about the whole world of finance and credit and so forth. And so during that time, I just started studying and learning, and I ended up convincing a friend of mine to let me rent his car from him. I was paying like $600 a month for a Caravan. Don't even explain why. It was crazy. But in that time frame, I just started to develop and learn about everything. I had nothing. My credit was horrible. I had very, low income. So I just wanted to get up. And I put my entire life into learning about credit, finance, the banking industry as a whole, because a lot of things that I saw, whether I was at Bank of America or even at other places, there really wasn't a lot of clarity on what works, what doesn't work when you deal with banks. What's acceptable, what's not acceptable, what's clear, what's not clear, when it comes to mortgage loans, business loans, credit cards, personal and business, just that whole entire picture. And so that's been my focus for, quite a long time. And I really wanted to master that process. So doing so, I started helping people out. I started first helping myself, learn about credit, building my own credit up, then working with some friends of mine that actually showed me how to get into more into the credit space and helping some other friends with their credit. And then that led to the lending space. And now I've just been putting a lot of time, since then, learning about banking. So I was able to help a lot of people when it comes to raising capital. I've raised millions of dollars for clients all across America, whether it be for a school, whether it be for a small little, nonprofit or church or whatever it may be, or even a lot of times like the truck drivers, the little guy who has nothing going on and just barely making it to, very high net worth individuals. I have celebrity clients. I have clients in the Pentagon, the White House, and so forth. So I built a, strong brand in this industry, helping a lot of people raise money consistently. And as we go through this, I've seen so much about, a lot of lending people online saying, I can do this or I can do that. I can help you with getting funding. And they talk about, go buy my course or come into my masterclass. You will never hear me talk to you about a masterclass, by the way. But nonetheless, I've seen a lot of that. And I just have been always passionate about helping entrepreneurs actually accomplish their goals by getting access to funding. So what we're going to go through today on this very first episode of the Banking Podcast is some of the misconceptions and the things that you really need to know about lending, just so you can understand the basics, and then we can build up over time. All right, so first we're going to get into the different types of business lending. I want to make sure we're clear on this, just because a lot of times when you go online and you see a lot of people talking about different options where you can get funding for, we want to make sure we have that clarity on what actually will work and what does not work. Okay, so one of the first things that a lot of people do when you're first getting started with the business, or even if you're at that 2-year mark, is they normally want to get like a term loan. Okay. And with the term loans, those can go up to, 1 to 10 years, depending upon where you're at income wise and what type of, loan product it is. But the term loans give you pretty much a large lump sum of cash. You pay a monthly amount back, and you're able to basically allow that to kind of grow. So as you pay that monthly payment back, it helps build up your business credit, and then you're able to flourish. Now, one of the most popular types of term loans is the SBA 7A loan. There's the SBA 504 loan and an SBA microloan. So we'll start our way from the bottom and kind of work our way up. So the microloan is pretty simple. Once you have everything established in terms of your personal credit, you're able to actually get the microloans pretty simply just because they go up to about $50K. They don't require a ton of financials for you to have, so you don't have to have like 10 years of taxes or some crazy, request like that. You're able to kind of be in that situation where you're not making a ton of money, but making some money and have a good idea, a good project that you want to do, and you're able to qualify. And a lot of this is credit based. Ideally, you do want to be in that 700 club and higher. I know some people will try to say 680, but just from experience, if you have a 700 or higher and you have a file that, is actually strong, meaning that you have, at least, 6, 7, 8 accounts on your credit report that are strong and positive, that will definitely increase your chances of getting approved for the microloans. Now, that does not mean that they will just give it to anybody. You want to make sure that you have a plan on what you want to do business-wise, and also go through the process of really understanding your industry, okay? Because when you're working with the bankers, like we connect you with bankers on a regular basis, so we don't just do the regular process of sending you to a bank blindly or having people apply online in our company. We actually connect you directly with either the presidents, vice presidents, or senior business bankers at the particular banks that we work with here at Emerson Capital. And then when we go through that process, they're able to do a thorough evaluation of what you have as a business. So with that being said, we want to make sure that you come correct and have the right financials and all that to go along the process. Now, the next step in that process is the SBA 7A loan. That SBA 7A loan is a really, really good product because it goes up to $5 million. You can use it for a myriad of different things, whether you want to buy a business, which is what I do recommend, and we also assist with that process, or if you just need funds for the business. However, the catch, the SBA 7A loan does typically take longer to get approved for. Okay, so you're looking at the fastest 30 days. Normally it can go up to 3 to 6 months sometimes. Now, the benefit of it is that the interest rates are going to be lower, similar to the microloans, also good interest rates on that as well. And when you have the SBA 7A, that loan basically puts you in position so that you're not paying really hardly any interest. You may be paying between, I think at the right now, the Fed rate is at like 7.5%. So it's not a bad deal in terms of interest rates. And it allows you to kind of grow, be flexible, and give you just a solid time frame, because the time frame for paybacks can be 10 years, sometimes even longer, depending upon the deal you have, especially if there's mortgage or real estate involved. But when you have that 10-year term, your interest rate's pretty low, so you're not spending a lot of money on that. So that's typically the holy grail when it comes to business lending. So pretty much everybody wants the SBA 7A. Now, going back to more of the catch is that you're in a situation where it may take some time to get approved, but also you do have to have quite a bit of financials. Now, when you get those financials, they have a situation where you need to have like profit and loss, balance sheets. They may ask for your personal financial statement. So when it comes to that process of the personal financial statement, it goes through all of your finances, make sure that you explain everything, the debts you have, assets you have, whether that be property, whether that be like life insurance or other particular assets that you may have, as well as your business itself. So in that situation, you want to make sure that you kind of fill that out correctly, which will, again, we assist you with this whole process. All right. But the other part of that is when you have the right financials, they'll also ask for like a business debt schedule. So if you have previous business debt, they may ask you, hey, you need to go through and fill all this out. Give us every piece of information needed about your business debt, whether it be previous or current business credit cards, business lines of credit, other business loans, things such as that. Any defaults can definitely hurt. So that's something that we'll have to work with you and get that cleared up if needed. But those things are definitely asked upon, especially if you're getting more than 100,000. Okay, so you're trying to get a large amount of money. You want to make sure you have the right financials. And again, we'll work with you to kind of make sure all of that works and makes sense. It is 100% verifiable, but you want to make sure you have all that together. And the other part of that is they will ask for 2 to 3 years of business and personal tax returns. Sometimes you may get a place, certain banks we work with will ask for just 1 year, but a lot of them do want you to have more years of history. Okay. And that applies to the SBA 7A loan, but also even for the real estate side, when you get into the SBA 504 loan. Okay. So that particular loan allows you to get access to real estate. So you can buy a property or heavy equipment. Like if you need to buy a crane or something large like that, you can use it for that purpose. Now, pretty much the same time frames, same rates for the most part. It's not too crazy on that part, but it's just really the purpose of what you use it for. Now, a lot of times the time frame though, of how long you can have that loan can be a lot longer. So that's why a lot of people do like that, especially for those of you who are in the real estate space, business development, that whole world, definitely good for you in that capacity. And one of the questions that a lot of people wonder is like, can we really get one of those when so many people are already applying? And you definitely can. It really comes down to who you're working with. And that's why I said on our part, we have a strong connection with a lot of the top bankers. So when we go through our process, it's a lot different than when you go through it alone, walking into the bank blindly with no credibility, recommendations, just your credit file and income. Okay. So when it comes down to it, those are the primary term loans that you're looking at. And when we get those term loans, they can definitely help you out. Now, one of the issues though that comes with getting the term loans is that you automatically have to start making payments right away. Okay. So versus some other business products you can get, those particular loan products that you do have to start making payments. Now, it may not be a high payment amount, but it is something that you have to consider, especially if you're like doing real estate and you have a project that's not going to pay you money for a long period of time. So typically you want to make sure you get a loan that's large enough to cover you for at least that first, 4 or 5, whatever amount of years you need to kind of get things going. All right. So what that means is also, let's say if we got you, you need to get 100,000, but in reality, 1 month's of payments or 1 year of payments may cost you, 15,000. Okay. That's a situation where you want to make sure that on your end, you budget a year. So when you get your loan, you put aside a year worth of payments in that bank account. So that way it gives you the time to maneuver and do what you need to do. So those are just some of the initial things we'll talk about. And again, as we go through the podcast, we're going to give you so much more in-depth information about this process, especially we're having you hear from our bankers directly. So that way you can see that, everything that we say is backed up by actual real people in the space. And then we'll go ahead and just build from there. All right, so the next piece of or type of funding that you can get on the business side are the business lines of credit. Now, everyone, and I mean everybody, when it comes to the business world, they always want to get these business lines of credit just because they give you the most flexibility of pretty much all the different options on the funding. Because a lot of times when you want to get a large amount of money, but you don't want to have to spend a lot on monthly payments, the business line of credit gives you a lot more flexibility. So let me just kind of explain how that works. So whatever bank it may be, they'll give you a set amount. Normally, if you're looking for a business line of credit, you can get one for 100,000 and below. So that way you don't have to give as many financials. If you want a larger one, then they typically do require full docs in that process. But when you get the business line of credit, it's essentially like a credit card, right? It's like a large credit card where you can withdraw the money off. That's the biggest difference versus like the credit card option. So when you get those business lines of credit, you have up to 6 months on average to withdraw a full amount off of that business line of credit. So if they gave you 100K, then you can take off 100K over the course of 6 months, or you can do it all in the very beginning or towards the end. It's totally up to you. But when you have those business lines of credit, it gives you such a flexibility because when you start using them, you can actually start making payments on those business lines of credit. And as soon as you start making payments, similar to a credit card, you can actually start withdrawing some of the money back and keep that flow going. So that way, unlike the term loans that we spoke about before, the business lines of credit will give you that flexibility so you can keep using it. So I always recommend them as well to a lot of our clients. And that's why when we go through our process of getting you funding, we want to make sure that you have as many of these as possible, just so that you can have a lot more flexibility. Because if you have a term loan for 100,000, as soon as you start making payments or even receive that amount of money, you're already pretty much in the debt, right? But we can get you a business line of credit or stack them up, and you hardly are even using any of those. Okay, so we can stack them up over a long period of time. So the other benefit of having them is that when you do decide to withdraw, the fees are not too crazy, so you can obviously operate. Now, it depends upon which particular lender you work with. If you're dealing with a finance company, they can be a little expensive. But when we go through our funding, we try to have you work with a lot of the banks, credit unions that we deal with, okay? So that way you get the best interest rates, best terms, and you can maneuver and so forth, all right? Another piece to having a business line of credit is understanding that you're not in an obligation to start making payments back right away. So meaning that if we got you 10 business lines of credit for $100,000 each, okay, you could be in a situation where you're not actually making payments at all, even though you do have $1 million in access. So now, again, like I said, you got up to 6 months on average to take the money out, but it gives you a strong flexibility so that way you can decide when and how you do that. And I recommend this a lot for people who are in real estate because that gives you that freedom. So that way you're not worried about, using all the funds at once. And the other beautiful part about it is the more that you use and pay back those particular lines of credit, the lenders feel a lot more obliged to give you a larger amount of money. So what that means is, let's say you got 100K, you paid it back right away. You get another 100K, you pay that back right away. Now, when it comes to getting larger loans or lines of credit for maybe a 150, 250, 350 and beyond, it's a lot easier because you build that relationship. And that's why, it goes back to why we call this the banking podcast, because a lot of people, even though we do discuss funding mostly, a lot of people are thinking about funding and not banking. We're teaching you to work with the banks, not just to get money from them, but work alongside them so they can help you grow your business and you help them grow as well. So in this process, everything that you'll learn is about setting that up. Now, what are the requirements? How do you get these business lines of credit? The number one objective here is if you're going 100K and below, most of the banks will allow you to get them with just taxes, personal and business, okay? 2 to 3 years ideally, all right? Now, if you're trying to get something higher, then that's when they start asking for all the other documents we talked about when it comes to the personal financial statement, the balance sheet, profit and loss, all those different pieces of documentation that you need just to show that you're financially capable of making the necessary payments back, because a lot of people get confused with just having a good credit score. You can have the credit score to get approved and go through the process of getting those lines of credit. But if you do not have the income to pay them back, that can hurt you. Okay. So you always want to make sure you're making money in the business. All right. Now, are there options for those that aren't making as much money yet? Of course, there's definitely options for that. But I always err on the side of caution. Make money, prove your concept while we work on getting you as much funding as possible. All right. Now, another part of the requirements for that is you want to have a higher score. So when you're looking at revolving debt, okay, so that revolving debt would be your credit card debt, other lines of credit, like if you have a HELOC or anything like that, you want to make sure your revolving debt is as low as possible. Okay. As low as possible, meaning under 20%, preferably lower if you can. If you can get it even down to 10%, that would be even better. Because when you're trying to get revolving debt, which is what a business line of credit is, you can't have a bunch of credit cards that are basically maxed out or at a high usage or even at 50% usage. Because sometimes in that situation, some banks are harder on you than others. So they may decline you simply because of that. All right. So when you're looking for this process of making that work when it comes to the lines of credit, understand that your credit file is not just about how good your score is, but what is actually on your credit report. Okay. So having the business line of credit option, you got to make sure your personal credit cards are at the base low percentage of under 20%. Okay. To get the best, highest chance of approval. The other part of that is the actual types of credit cards you have. What does that mean? Meaning that if you have credit cards that are very high or very low in terms of the limitation or limits on the cards, you may get a smaller business line of credit. So you want to make sure that you start to build it up with positive trade lines on your personal credit. So that way you can actually use that in function, because when you want to get approved for that business line of credit, they will see what other similar level of credit that you have on the personal side. They will normally give you more on the business, but if you have a bunch of $300 cards on your personal credit, you are much more likely to get declined for $100,000 business line of credit. That doesn't mean it can't happen. It can happen still, but you want to put yourself in the best situation, again, which we can help you with that whole process. Okay. So it's very important that you understand that. And as you build, this will put you in the best situation. All right. So the next piece of the puzzle is invoice financing. Okay. Now, the reason why I like the invoice financing option is because it really tailors itself to a specific type of business. All right. Now, let's say you have a really good product, okay, and you work out a deal with Walmart or Target or even, another company. When you set that up, sometimes what happens is they'll give you what they call a purchase order. All right. And in that process, when you get the purchase order, they may say you need to supply us with, 100 of your particular product or 500 of your particular product or service, whatever it may be. Now, when you do that, it's an upfront cost for you to give that to them because you have to, produce, make all that stuff. So let's say if you were doing, I don't know, whether it be let's say if you made fish tanks, you'd have to get all your fish tanks ready to go. Okay. And make sure everything's done. They look the way they're supposed to be, have all the different pieces of the puzzle in terms of, everything that's needed for a fish tank to operate. And having all that done for 100 of them, that can be a very expensive project. Okay. And so in that situation, you want to make sure that you have the option to have some financing, because if you have to do that, even though it's a great deal, you got Walmart to agree for this amount of money. The problem is a lot of times they may not pay you for, a month or so in that time frame. So what happens is you need to get financing, but the financing you should get needs to be based off the deal or the contract that you set up. Okay. So this is very good because it's not dependent upon your actual personal credit. Okay. Yes, your credit needs to be good, but you don't have to feel like you have to have the greatest credit in the world to get approved, because it's actually based off the credit of the person or the company that you're actually working with. So what does that look like? So let's say if you have 100,000 that you need to get, and that's what, let's say Walmart would have owed you. Well, because Walmart's strong, business credit, they're able to put you in a situation where you're able to get a lot of that right away. Because when we go to our banks and we say, hey, our client, they got a contract with Walmart, it's going to be about 100K. They're not going to receive that money until a month, 2 months, or whatever from now. In that situation, the bank will actually work directly with Walmart to make sure that they receive their payment back from them. However, they can give you the financing right away. So that way you can go do everything you need to do to have all the products ready, to make sure you're able to put everything in the best situation. So as we go through this process of understanding how these different types of funding work, it's really important that you look at what works best for your business, because in reality, we can do all these at once simultaneously. Okay. And we'll go into that as we go through the podcast. Now, the other part of this is the requirements, kind of like, what do you need to have together? Obviously your business, ideally you'd want to have 2 years of experience in your business. They want to see a track record, because they want to make sure that if they're giving you this amount of money, that you're going to do what you said you're going to do for Walmart. Okay. That you're not going to waste time and not do good business, because the only way they don't get the payment back is if you basically mess up. Right. So in that situation, they're going to vet your business. So you want to make sure that you have all the necessary pieces, making sure your business is registered, ideally 2 years of history, active Secretary of State. So that way you can make sure that on their side, they can check and see your business is ready, active, and able to do business where you actually say you do business at. Okay. The other part of that process is making sure that you have the right type of vendors, because this is not going to work with everybody. Okay. So if you have a vendor that's really not that established, but they have a net 30 agreement or any type of agreement like that with you, where they're paying you after 30 days or after 60 days, it's not an ideal situation for you to even work with someone like that in that type of term. Ideally, you'd want to have all upfront terms. But if you also aren't established, sometimes it's hard to get that done. So that's why you want to kind of build that rapport, build the relationships with, and build your clientele, more importantly, with other types of clients that will pay you up front before you go to people that can't necessarily pay you up front, but will put you in front of a lot of different consumers that are ready to buy your product. Okay. So when we do this, we like to make sure that you as a business owner are in motion, making sure that you have the right brand and all those things, because even though a lot of times people don't go into this level of detail, but when you're an underwriter and you have to say yes to giving $100, $200, $300,000 or more to a particular business, you got to be able to explain why you did it. And it can't be, oh, I didn't check this or I didn't check that. They're not going to tolerate it. So always think from an underwriter's perspective, meaning that you don't want to have any holes, any weaknesses, especially things that you can control. You can control, making sure your business is set up right. You can control making sure your brand is set up right. Okay. So those things, you don't want to make a mistake. But more importantly than the lender is the client. So you don't want to blow a deal with Walmart either. Okay. Because that'll cost you way more than anything you could get from a bank. All right. So when it comes down to your process, making sure that you have all these back end pieces together. So that way, when the banks see you as well as your larger clients see you, you can build that reputation. Why? Because when you keep this process up, now every deal that you would do with a Walmart or a Target or other types of companies like that, you'll be able to get funded a lot easier, because the bank knows that you're going to do your job and you're also bringing the right type of vendor, so they know that they're going to get their money. And the more this process works, the larger the deals you can do. So now, instead of you being in a situation where you can't do certain type of deal, now you're able to access it. So they consider the invoice financing similar to what they call factoring. I'll give you another example. Let's say if you got a government contract and the government contract was for $500,000, okay? And a lot of times when government contracting, a lot of newer sellers or whatever that may be, or contractors are able to access those larger amounts, surprisingly. But when you do that, you better make sure you can deliver, okay? So if you are the primary on a government contract, you're able to get access to a similar amount because the loan is basically backed by the government, which is the ultimate backer. Okay, so they know the bank knows the money's going to get there. They're already working with the government because they have a bank in the first place. So you know that they're going to make sure that everything goes smoothly. So the only way that becomes a problem is if you don't do your job. Okay, so they look at your actual history when it comes to doing all of your contracts. They do check and verify that on how you operate with not just with the particular contract that you have coming up or that you've already bid on and got approved for, but also previous contracts that you may have. So all of those things tie in to make sure that there's no weaknesses in your process. Okay, so you want to make sure that you do your best to facilitate and work with the best type of contractors or government, like I said before, so put you in a good situation. Now, the other part of that is on your end, you want to do everything you can to get not just the right types of vendors or whatever it may be, your contractors, but a contract that you know for a fact you can do. Okay, so you don't want to use this for deals that you're kind of 50-50 on being able to deliver. You want to make sure that you can do exactly what you said you can, because if you go through this whole process and you put everybody involved in this situation, you want to make sure that there's no chance of failure on your part or their part. Okay, so those are just some of the things that you need to understand when it comes to invoice financing as well as like government contract financing, because it kind of works the same way. All right, so you've heard a lot already, but there's more. When it comes down to this next part, it's very good. I think that some people, they really don't understand the magnitude of this, but you're able to access what we call equipment financing. Now, with equipment financing, this opens up a lot of doors, okay? The only caveat is you do have to have good credit for this to work, all right? But when it comes to equipment financing, you can have lenders that will finance a particular project that you need to get done, or a particular product that you need to purchase. So let's say, for example, you have trucks that you need to buy, or if you have some other type of inventory for your business that you need to have access to, okay? You're able to get the approval by just literally getting the invoice from whoever is selling you that product. They'll make sure that the product is legitimate in terms of the banking side and the deal is legitimate in terms of the invoice. And a lot of times you're able to qualify for the financing for that specific product or whatever it may be. Now, this is really good for those of you that are in the trucking industry. A lot of you who are even in other industries like the entertainment world, where you're able to, let's say you need to buy studio equipment, okay, and you don't have the funds to cover the cost. You need to buy film equipment. This works really well for that particular space just because you're able to get the approvals for that, and you can actually prove that, hey, I do need this for this business to work. Okay, so as you get access to, whatever different deal you need to do in terms of the, let's say if it's like for any type of camera or equipment or any type of setup in terms of like your soundboards and all that stuff, you're able to get approved for the full amount or even close to the full amount. So let's say if it could be 85, 95, or even 100% of whatever you need to cover. So this works out well because in your situation, they do care about you having 2 years in business. So that's always going to come up, but we can always help you when it comes to building up your business history and credit and things like that. But when you have that history in terms of the business, as well as your personal and business credit are strong, you're able to qualify for a lot more. But there's always a catch. You have to make sure that what you're actually looking to purchase has some value, particularly if you default on the situation. Now, the money that you use for this, you're still the one guaranteeing all this, so you're still responsible. But the bank also wants to feel that whether it's you or whether it's the particular equipment that you needed to use for the lending for, that they can get their money back from either one of you. Okay, so in that situation, you want to normally use this for things that you know are going to be of high value, not for like, oh, I want to buy a chair. That's not what we're doing. You want to use this for larger amounts of money that will put you in a much better situation than you are currently at the time. So when it comes to getting that equipment financing, it's important that you focus on larger situations, such as if you're looking for a truck or you need to buy a new car because you need to go do more business. This situation will put you in a best possible predicament. Why? Because when you do the equipment financing, everything will be on the business. Okay, so typically you see that reporting on the business credit and not on your personal credit report. Sometimes it can be on personal, depending upon what bank it is, but a lot of times it's not. Because it's not on your personal credit report, you're able to actually get a lot more. What I mean by that is you can actually get several different pieces of equipment to kind of help grow the business. So if you need to get multiple trucks, if you need to get multiple cars, if you need to get film work, or in fact film items such as your cameras, your soundboards for recording or whatever it may be, you can actually stack it up and get as many as you need to help grow the business, because it's not all on your personal credit report. So that gives you a lot more flexibility, because normally what most people do is they'll get personal credit cards and they'll put all this on the personal, and then their card is maxed out. And now they're wondering why their score tanked and they can't fix it until they pay it back. Well, that puts a lot of pressure on the business to make sure that you make money back right now to pay off not just your day-to-day life, but also, the life of your staff and everybody else, and to also make sure you can pay off the personal credit cards. So in this situation, you want to make sure that you get the right types of items, right types of equipment that will actually help you all the way when it comes to making money. So you don't really use this for things that are not directly affecting making money. Okay, because if you're going to take out a loan and put the pressure on yourself and your business to pay that loan back, you want to make sure it's going to something that will actually pay you and not put you in a situation where you can't pay it back. All right, so all the lending that we speak about, always want to make sure that you have a real plan. So what are the steps you need to take? Look at exactly what is missing in your business from an equipment perspective that's holding you back. That if you had this, if you had that, it could actually open up another door that you can access this other level of income. Okay, so those things are needed. Let's say if you're in the restaurant industry and you need to get a certain amount of chairs in that situation, well, maybe that could work because you do need chairs to have your restaurant. But if you're just saying, hey, I just need a chair to sit on while I'm in my office, it's probably better you just use your own money to do that. Okay, so if you do need to do anything that's like in a large amount, especially like if you have a larger contract or a larger setup that you need to accomplish and make sure that everything's there, then you want to get as much access to the equipment financing as possible. Now, this works because you can do, like we talked about before, the SBA microloan. You can have or an SBA 7A loan, as well as you getting the business lines of credit and the equipment financing are all separate, meaning that you can have all of them at the same time, as well as the invoice financing. So they're not mutually exclusive to you having them only, meaning sometimes other lending, people just kind of pick, okay, I'm just going to have this type of lending, or the bank may put a requirement that you can get other loans or other lines of credit elsewhere. For example, if you're doing an SBA loan and you get approved for 100, 200,000 or whatever it may be more difficult to get another SBA loan under the same name in terms of your business name. So in this situation, when you have the ability to get equipment financing, it allows you to get as much as you want without any of those restrictions at all. So again, requirements, you want to have a 700 score to make sure your score is as strong as possible, but also choosing the right type of product or equipment that you need to use it for, 100% very important. They will ask for the invoice, so make sure that you have that, and they will ask you for other information about the seller, just to make sure that everything is legitimate. Because some people will try to get like their friend down the street to say, yeah, I'm selling you this crazy product and I'm pricing it at this number. Will you give me the money? They're going to look through that. They've seen enough of that, so don't even waste your time trying to pull a fast one. Okay. But when we do this, you have the right strategy. We like to get all of these different options working for you at the same time. So that way, when it comes to financing, you have a full financial picture. This is why, as I said before, it's about banking, because you can get all of this done at once. And now you have all these strong relationships with different banks. So when you need to get more money, you can keep going back and getting more and more and more as you grow. So that's exactly how we want to make sure you're structured going forward. All right. And again, as we talk about all these different options when it comes to lending, the number one most important part is having a plan for what you want to do with the funds and making sure that you can pay it back. Okay. Don't just go out there like a lot of people and just try to get all this financing thinking that, oh, I'm free, I'm good, I'm going to put it on my business. The stronger that you have in terms of payment history, building these relationships with these lenders, it'll open up so many more doors. And that leads us to our next topic, which is about the business credit cards. All right. Now, when it comes to business credit cards, this is something that, many of you probably already know. There are 0% interest options when it comes to business credit cards, as well as there are a lot higher interest options when it comes to the business credit cards. So it really comes down to your personal credit and also which particular banks you work with, because a lot of these banks will still try to pull a fast one on you, even when you have a good credit file. I have a client that we took him to one particular bank, and with an 811 score, they still charge him 20% interest. Okay. But another bank gave him a 0% interest. Now, this is the picture that you need to understand when it comes to this whole process with interest rates for all these different types of deals. Interest rates are important, but what you're using the money for is the most important. Okay. Because if you know that it's going to lead you to making, another 50 or 100K to your business, whether it be over the course of a year or even over the course of a month, don't worry as much about how high each interest rate is. Okay. Because again, it comes back to the project. Now, in some scenarios, the interest rate is too high and it could put you in a situation where you're paying back more than you should be. So we always try to get you the lowest possible interest rates that there are. But keep in mind, it's always about what you're using the funds for as the first and most important piece to the puzzle. Okay. So the other part of that too is when you're looking at getting business credit cards, when you have a business that's been established for even a few months or even a year, okay, you're going to be in a situation where you get maybe smaller business credit cards. Can you still get them? 100%. Yes, you can. Okay. But they may not be as high. So the chances of you getting like, $100,000 business credit card, can it be done? Yes, but it's very low percentage unless you have a strong relationship with the bankers and they really see the vision of where you're going. So that's why when we go through our funding process, it's not a normal route. Okay. We work directly with the top bankers so that we're able to get you the top options. All right. So when it comes to getting those business credit cards, your revolving personal debt is extremely important. Okay. You don't want to have a bunch of high usage on your personal credit. If you do, getting business credit cards is extremely difficult. All right. So if you're in that situation, it's almost better that we work on that first. We have different options on how to handle that. So that way you can put yourself in a better situation. And there's a lot of ways to deal with it. So if you are in that predicament, you don't have to be, down on yourself. Normally what that does when you have the high credit card usage, it puts your score around that 650 to like 657, 660 range. Okay. So if you're in that situation, you probably already know what's going on. Now, when we go through this process of getting business credit cards, you want to have all that stuff at the lowest possible interest rate. It's similar to the business lines of credit where you have, under 20% on the usage side. Okay. So definitely want to do that beforehand. The other piece to getting those business credit cards is the annual percentage rate. So you always want to make sure that that's a good situation for you that you can handle, as well as any type of annual fees, because sometimes they do have higher annual fees per business credit card and it could hit you at the wrong time. So if you're dealing with a particular bank and you decide, hey, I want to get a larger business credit card with you, keep in mind those annual fees you have to adjust and keep track of that, because when you first sign up for the business credit card, they have that listed in your agreement. So you know exactly what that is, but you want to make sure that you understand all the fees and when they're due, because they can come up at the wrong time. Okay. Now, another part of that process is understanding the limits, because certain banks have a minimum limit that they deal with and a maximum limit. Okay. So if you're dealing with certain banks that normally don't give out large limits unless you have an extremely long history with them, those are places that may be a little harder if you're looking to get a large amount of money now. But in our situation, we work to get you options there where a lot of the lenders that we work with don't require as long of a history with them to get approved for a larger amount. Now, another piece to that is when you want to get these business credit cards, you have to make sure that you build the entire relationship with the bank. Okay. So can you get a business credit card without it? 100%. Yes, you can. But the stronger you build the relationship with that particular bank, the further you'll get. So let's say if that bank is a bank like Bank of America, for example. In that situation, you want to make sure you have a really good history with them. So you would have a bank account, whether it's personal side, a business account, savings account. So that way they see that you're invested. And more importantly, they see that money is coming to their particular bank. So they know that the deposits are going to be there. And that allows them to feel a lot more comfortable giving you larger and larger and larger amounts of credit. Okay. Especially if you're maintaining good balances on your other credit cards. All right. So another piece to this is if your personal credit cards have, again, a high balance, or you have a lot of late payments on them, all these reasons can lead to you getting either declined or a much lower offer than you really are worthy of. Okay. Even when you have good income. All right. So all these things are to be taken in consideration when it comes to getting the business credit cards. But can you get them? 100%. And I recommend any new entrepreneur, especially if you're in that 2-year mark or under, you want to have a lot of options on the business credit card front. Some of the banks like Amex allows you to get multiple with them. Okay. And you can do that with a lot of other banks, but you want to have multiple options on business credit cards so that way you can function. Because if you choose to be in a situation where you just got one card, remember, they can close your card for any reason. Okay. It doesn't even have to make sense. And a lot of them won't give you any explanation. They'll just close the card without any explanation, and they'll just send you, a bill in the mail saying you owe them whatever the balance was. All right. So it's very important that when you get these business credit cards that you have several of them to work with, because like the option with the equipment financing, majority of the time you can have yourself in a situation where those business credit cards do not report on your personal credit report. They actually report on the business side. Okay, so that'll actually help you build up the business credit once you start working with Dun & Bradstreet, which we'll talk about, as we go through the different podcasts. Okay, so you want to get as many of the business credit cards as possible, because the traditional thought is, I don't want business credit cards, I only want cash. But the problem again comes back to, when you pay off your loans, you have to reapply and start over. But when you pay your business credit cards, you can use the money immediately. Okay, so that's why it's always an option to keep that process going. So regardless of what level you are at business wise, whether you're making 50 million a year or 500,000 a year, or even way lower, even if you just started the business credit cards are always the best option to get things rolling, because not only do they have a situation where you're able to have keep using the funds, but also your monthly payment will normally be a lot better on business credit cards than pretty much any other type of lending. Okay, so you're usually going to have a lot smaller amount that you have to pay, because you can have a business credit card for $50,000 and you may be paying $400,000 to $600 a month, versus if you have a loan for $50,000, you could be in a situation where you're paying anywhere between $800 to as high as $25,000 or $3,000 a month, depending upon the lender. Okay, so that's why you always want to make sure that you stack up the business credit cards, as many as you can, and that's what we kind of help you with as you grow. All right, and this just keeps basically gives you that cushion, so that when unexpected payroll hits, or you get the lawsuit, or some big client stops at the wrong time, or your employee quits on you, and that causes all these other problems where now you got other people working out of term and out of position. All those times you're going to need to have those extra funds. When things go wrong, you need to have those funds. And that's why having those cards are a lot easier to get approved for, because most of the times for the requirement side, they don't require as many docs. So you may not have to have a bunch of paperwork to get through in getting the larger credit cards. Now, when you want to get those, 80K or usually above 50K, you'll start to see where they want to have a lot more paperwork in terms of taxes, or even sometimes, like I said before, the profit and loss balance sheet, things like that could come up. But for the most part, you probably won't deal with that as long as you kind of keep things orderly. All right. So in this situation, you want to try to get as many of the business credit cards as possible, so you're able to grow and kind of sustain things while you figure this out. The other benefit of having the business credit cards, unlike all the other options that we talked about before, is that they don't put a lien on your business. So a lot of people don't talk about this part, okay? But when you get a loan or a line of credit, in a lot of situations, that lender will put a lien on your business, because they want to make sure that if you go bankrupt or anything goes wrong, they get a certain amount of money out of the deal. If you sell this business to someone else, they want to make sure they get a certain amount out of the deal. Okay, so it's really important that you understand that, because when other banks see the lien, you could get declined depending upon how their underwriting guidelines work, where they may not be able to approve you for as much, because you already have a pre-existing arrangement with another bank. Okay, versus when you have the credit cards, you'll be able to keep having a lot of options, and then you can kind of build up from there. And all of this will still be able to report on your business credit report. So that's why we recommend the business credit cards. All right, now the last piece to the puzzle. This is what I call the nonsense. And the reason why I say that is because we're talking about merchant cash advance loans. I heavily recommend that you choose wisely when it comes to dealing with them, because there's a lot of pros, but there's also a lot of cons. So let's get into it. With merchant cash advance, you're able to get approved for with horrible credit. Okay, your credit could be 550, 560, 570. You can still get approved for a merchant cash advance. Why is this a big deal, or why is this a problem? Because the setup that they give you is a lot faster when it comes to payments. For example, you get approved for a merchant cash advance typically because you're making over $10,000 to $20,000 a month through your business bank account. Okay, they tend to prey on those that have a decent income, but not that too high of income, or that have good or decent income but have bad credit. Okay, so it is good in terms of having some funds. If you have bad credit and you need to pay payroll by tomorrow, this is the type of loan you need. It is faster than any other type of loan product or credit card option that we've even covered today. Okay, so how does it work? When you get the merchant cash advance, as I said, you're making 10 to 20K or higher in terms of your deposits through your business bank account. However, when you get those deposits and you show proof of that, they're able to give you anywhere between 10 to 20% of what you make in the course of a year. Okay, so they look at your averages, see what your numbers look like. More importantly, they do check your ending balances because they want to make sure you can afford to pay after all of your bills and everything has been paid, as well as your average daily balance. Okay, so you want to make sure that you keep a strong average daily balance in your bank account so that way you can qualify for these types of deals. All right, now when you're looking at getting approved, you typically can only get approved for 1 to 2 of these at a time. There are some scenarios where you can get multiple, but after you get them and actually receive them, that's pretty much it for a while. Okay, because banks and credit unions, as well as the other finance companies, look at these loans as very predatory, because what happens is when you get the approval, they'll fund you within 24 hours, sometimes same day, or within 48 to 72 hours. But the situation becomes a thing of where you have to make payments every day. What does that mean? You're making payments Monday through Friday, 22 days a month, excluding holidays and weekends. So that way you can pay them back. So it could be $50 a day. It could be $100 or $200 or more a day, depending upon how much you took out and how much your business makes. Now, the issue with this option versus all the other things we talked about before is that this is the one type of lending that does require rapid payments, meaning daily or weekly. Okay, so we tend to not recommend you do that unless you have a very, very, very good plan on how you're going to be able to pay it back. Because when you have that pressure on the business, and let's say you have a random slow month or something doesn't go right or you lose a big deal, these lenders are very aggressive. They will actually file a lien on the business as well. So that way, when you receive payments, let's say you have clients that pay you regularly, they have access to your bank account. They're one of the only ones that actually mandatorily always use what we call Plaid. And Plaid is a system that literally has been kind of like the end of scamming, because it actually pulls all bank records. So it logs into your bank account and it looks at all your previous transactions as well as your current transactions to see what your financial trends are, as well as to see who owns the business bank account, to make sure everything that you told them on your application is exactly what it really is. So when that happens, they're also able to withdraw money because you give them the ability to withdraw money to make the payments back on the loan. When they make those payments, and let's say you miss a day or you miss a couple days, you're getting phone calls, you're getting emails saying you're late, you're missing days. But if you go too far into the missing of those days, now they they will basically put a fee involved. That fee could be $2,500. It could be way higher or sometimes lower. But that fee for being late and having overdrafts or declined payments can get out of hand. Now, What happens if you just can't pay them back? Most people would do a stop payment. So they're going to have a problem with that. So what happens is you not only have the late fees for missing all the days that you've missed, but they'll also put you in default. And then if you do a stop payment, there's an additional stop payment fee. So you could have gotten a loan for $3,000, $4,000, $5,000, $6,000, $10,000, but end up paying back $8,000 just that easily. Okay. So that's why it's important that when you get these types of loans that you really choose wisely on what you're going to spend it on. And typically when you get those, you want to make sure that you are using it for something that directly affects you making money right now, that you know for sure will work, that you have a lot of control over the result. Because if you're using it for someone else's process or someone else's results, it can put you in a really bad situation. I say that because when they go through the process of collecting the debt from you, if you don't pay them back, they sometimes will contact your clients via mail or email or phone call and say to them to pay them instead of you. Why they're able to do that? Because technically they really shouldn't be doing it, but when they put that lien on your business and you don't set things up correctly, it can put you in a situation where those clients that you have could find out about your default with them because they may broadcast that. Now, again, a lot of this is fightable from a legal perspective, but still the fact that you have to go through that is just an issue. Okay. So that's why I tell a lot of our clients, avoid these types of deals unless you really have the funds to actually pay it back for sure. Okay. Or you are going to make them and you know it's going to work. Because if you do this and you don't have that together, it can be a problem. And as soon as you start making money in your business, this is the most commonly solicited loan. If you have made any high level of income over 10K in your business, you've probably already been contacted. They will send mail to your house saying you're approved for $200,000, even though they never checked your credit, personal or business. Okay. So those are things you want to be careful of because again, they have a very aggressive marketing strategy. They'll tell you can get it, you can get approved, no problem. Just go ahead and put your information in. Now, what are the requirements? Your documents are typically very minimal. They really just want to see your bank statements. If they see your bank statements and then you give them access to your bank account, they want to have a voided check, your ID, proof of address, and you're pretty much in the door. Okay, so it's not a hard criteria when it comes to getting approved, but you do have to make a certain amount of money. They do care about, again, ending balances and average daily balances, as well as overdrafts. You don't want to have usually more than 3 to 4 overdrafts in the course of a month. Some of them are a little harder to use than others, but the more you have a strong bank account, the more options come up, and then that way you can qualify. Okay, but again, like I said, if you take these types of deals, make sure you have a plan. All right, so today, we covered a lot when it comes to the different types of lending you can get. We want to make sure that you understand that. If you have questions, we're here. You can always visit us at emersoncapital.com. That's EMISONCAPITAL.com. So you can actually go ahead and find out more. You can also give us a call at 888-708-0195. All right. And if you have other questions about, the process of how you get through this, we're going to cover that in a lot of the different podcasts that are coming up. So you'll be able to get a lot more insight. We're going to have a lot more bankers that we actually bring on, so that way you can hear from basically the horse's mouth. And that way you're able to get a clear picture on what is the actual truth versus what is put out there in the mass media, because so many people are deceiving you all, thinking that you can get approved for this crazy amount of money, know this, know that. And a lot of times that's not the case. So we just want to make sure you have the right understanding, the right picture, and that way we can build from there. And in the words of Nipsey Hussle, don't ever let a hard time humble you. I stand by that because I've helped a lot of clients over the years to get through some of the most difficult situations they've ever could have imagined. And I've been through that. That's how I started this whole process. And I've always been passionate about that. So with that being said, if you have questions, need answers, reach out. We're here to help you for real. We're not just here to make you another number. We want to see you accomplish your goals. We spend so much time helping people that, we don't even get paid for it, to be honest with you. So with that being said, definitely make sure you reach out. Again, this is Ashton Sanders with Emerson Capital and the Banking Podcast, episode 1. We'll see you on the next one.